welcome to today's morning report chart analysis videos on Thursday 22nd of November with me, Richard Perry, market analyst at Hantec Markets. It is Thanksgiving Day today, so you've got a large portion of the market out of the action today. So thin market volumes, lack of liquidity, potential volatility, but normally what you see is dead markets really. And let's have a look at how markets are actually doing today. Not a great deal of direction. A slight move against the dollar on the G4 majors, although if you actually look at the commodity currencies, they're actually underperforming against the dollar. Interesting that the Kiwi has dropped back quite a lot today, but it has been very strong recently. And that is in the context of the fact that the dollar has sort of just slipped back a touch yesterday, and as I said, it just doesn't look as though the traction is there following on from Tuesday's quite strong rebound. You saw Treasury yields falling back into the close yesterday, 10-year sort of closing around the low of the day, even though it was higher on the day. That came after a string of disappointing, you could argue, US data form coming out yesterday. I mean, not tier one data, but certainly the durable goods were a little bit lower than expected. The weekly jobless claims were a little bit higher than expected, and also the Michigan sentiment was final reading of that was lower than the prelim reading as well. So it was a little bit of a disappointing session in terms of the dollar yesterday, and that was reflected in the fact that the dollar actually sort of has drifted a bit lower. Nothing too significant, but also noting the fact that oil bounced quite strongly yesterday, but that bounce has been sold into today. Again, back another sort of percent and a half dip back on the WTI there. And what we do have today is bond markets are closed, and you got some futures trading. As you can see, that the S&P 500 futures on the electronics are trading, but you're not going to get too much action, I don't really think, unless you're going to get some significant news flow that changes any sort of picture regarding the Eurozone and Italy and the budget situation there, or Brexit. I don't really think that there's going to be a great deal of overall direction. Now, you are getting a bit of direction on equities, though, with that correction on Wall Street back into the close. We've seen equity markets sort of starting to move lower again. In Europe, there was quite a strong bounce yesterday, but that bounce has seemingly been sold into, certainly on the DAX. There's resistance overhead at 11,230, and the market has sort of come back from that resistance today. Now, as I say every day, you've got DAX analysis on our website, so you can read up about that. But certainly the equity markets in Europe not looking all that sharp today. So in terms of data points today, nothing out of the US. As I said, Thanksgiving means the markets are closed there, but you've got a little bit of Eurozone consumer confidence at 3 o'clock. Expected to dip again back to -3 from -2.7 last month. Before that, you've got the ECB minutes from the meeting for October. The expectation is, or the markets will be looking out for any sort of comments surrounding a potential global slowdown, I suppose, and the impact that could potentially have on monetary policy for the ECB. But yeah, that's at 12:30 this afternoon, UK time. Now, my chart today is Euro Canadian. What we've seen in Euro is a little bit of an improvement in outlook in the last week or so, and that is certainly on Euro dollar. Coming at the same time as the Canadian dollar has been under pressure, so subsequently that sort of all adds up to Euro Canadian going higher. Now, can that recovery in Euro Canadian actually do something? Because you've got this downtrend over the last sort of 5 months or so on Euro Canadian, which is now being tested. That resistance that was broken on an intraday basis, that resistance at 51.35 was broken on an intraday basis yesterday, but not into the close. But it's interesting that the market then rebounded from the 150.50 support, because old resistance becomes new support having been broken. And it's interesting that that support has been holding the last 2 days as the market's ticked back higher again. Now this suggests that this is a nice band of support that the market will be looking at to possibly use as a buying opportunity to test this downtrend, but also you've got the testing of the resistance, the downtrend, and this 144-day moving average, which, if you sort of zoom out, has been a pretty decent basis of resistance over the past few months, really. So breaking above those levels would certainly signal a bit of a turnaround in the outlook on this chart and reopen the highs at 153.25 again for being tested. But as I said, this little corrective move back into support is potentially going to be seen as a buying opportunity, and we need to see the market continuing to close above 150.50 as that breakout level, and to maintain the improvement. And you can see here on the hourly chart there is still this sort of improvement of higher lows, positive momentum indicators configuration, RSI above 30, MACD lines crossing back high, stochastics pulling back higher again as well. So there is this improvement that continues to suggest that buying into weakness is now a basis for the market. As I said, look at that 150.50, old breakout becomes supportive. And that is the case now, so we need to be watching out for that as your key floor near term. Continue to do that and close above 150, 135, and you're then opening these highs from September. So I wish you good luck in your trading today, and I'll speak to you later.